Isaac Newton changed how we understand the universe. But when it came to money, he lost the equivalent of $4 million in one of history's most absurd financial crash. This is the story of the stock market crash that fooled Isaac Newton. In the early 1700s, Britain was broke. Decades of war left the government buried in debt, nearly £50 million, an insane amount at the time. But out of this financial mess came a bold idea. What if the debt could become profitable? It sounded insane, but Britain was desperate enough to try. In 1711, the South Sea Company was created. Its pitch? Let the company take over a chunk of the government's debt. In return, anyone who held that debt would exchange it for shares in the company. The government would then make regular interest to the South Sea Company, and they would in turn pass that money on to its investors as dividends. For a lot of people at the time, it seemed like a win-win. The government was managing its debt, and investors got steady income. It looked safe and smart. But what truly fueled the excitement was that the South Sea Company claimed it had exclusive rights to trade with South America. People imagined ships loaded with gold, silver, and treasures crossing the Atlantic. But there was one giant catch. Spain controlled most of South America, and Britain was still at war with Spain. This trade agreement was more of a dream than a deal. They had the rights on paper, but no real access. People were not too concerned about the details, debt was turning into wealth, and the public wanted in. By 1720, the South Sea Company made its big move. It offered to buy even more debt in exchange for more shares. Both investors and Parliament loved and approved it, and the price of South Sea stock, it skyrocketed. And here's where the madness really begins. In January, a single share sold for £128. By June, it hit £1,050. That's nearly a 900% increase in 6 months. Suddenly, everyone was getting rich. The nobility, the clergy, servants, housewives, even Isaac Newton. He bought early, made a profit, and then sold. That should have been the end of his story. But it wasn't. As the price kept rising, even Newton couldn't resist. He bought back in. The frenzy grew so insane, the company literally had to shut its doors for 2 months to get through the paperwork. But when the books reopened in August, everything started to unravel. The price stopped rising. People tried to sell, but there were no buyers. And when the selling started, the crash became unstoppable. The panic was instant. Shares plunged from £1,050 to £800 to £500 in just weeks. Banks froze as investors watched years of savings vanish overnight. And Newton? His story is almost too painful to believe. Newton lost £20,000. That's over $4 million today. Gone. What's really surprising is that Newton started as a skeptic. He made money early, cashed out, and walked away. That was the smart move. But then, as prices soared, he changed his mind. He put nearly everything back into the South Sea Company, right at the top. At first, he stayed hopeful. Even as prices dropped fast, he held on, thinking they would recover. But they didn't. And Newton lost everything he had gained, and more. Later, he admitted and supposedly could not bear to hear of the South Sea affair to the end of his life.
He could calculate the motions of the heavens, but not the madness of men.
The South Sea bubble wasn't just a collapse. It's a mirror, a reminder that markets don't just run on money, they run on emotion. And 300 years later, it still happens. The details change, but human behavior stays the same. And no one, not even a genius, is immune to fear of missing out. If you found this story valuable, consider subscribing, because history has a lot more to teach us about money.